everyone to the Granite Keynote series in what is our last event of the financial year. Before we get started, I'd like to introduce Clifford Bennett, our featured speaker today. We're delighted to welcome Clifford back after what was a fantastic talk he gave last year. In order to make sure you all receive maximum value for this morning, we've asked for questions and topics of interest from the attendees. Clifford has over 25 years' experience working with leading investment banks across the world. Without further ado, let's hear what the man himself thinks. So Clifford, what really happened over the last 2 to 3 weeks of market turbulence?
Okay. Basically, what I've been arguing through, particularly I guess it's only 1 week ago now, 8 days ago now when Bernanke gave his speech. But I think, and then just before that, we had the usual stories about China slowing down, etc. The headings of most of my reports lately have been markets are wrong. So I know we're all taught that markets are right. In fact, markets are always wrong. That's why they're volatile. That's why they move around. They've never quite discovered their correct fundamental value, so they're always seeking that correct fundamental value. That's why markets move. The fact that markets are wrong is what makes investing in stocks worthwhile. If the stock price was right, there'd be no point investing, apart from the yield, of course, the dividend. So I think markets got it badly wrong. I wrote that markets would get it wrong in advance. So in advance of Bernanke's speech, I said the markets will get it wrong and they'll sell down heavily for 2 to 3 days. It's turned out to be 3 to 4 days. But yesterday morning, I wrote an article and I said that markets should be rallying by Friday afternoon, equity markets in the US, and there was a bit of a bounce. And then on Monday morning yesterday, I said what we're going to see today is a big sell-off in Asia. We're going to see a follow-through sell-off in the New York morning. And then by Monday afternoon, we'll see the US market start to rally. That's exactly what we got. So yesterday I was telling clients, okay, so you're seeing a headline for the Dow down 0.9%, but it was actually rallying all afternoon. And the bottom was already in place. And we've seen another small gain overnight in the US markets. So I think really I would depict the last 8 days. The 2 to 3 weeks before is almost ancient history now because we've all been dominated by Bernanke's speech. Bernanke's speech was all good news. And I'm not one to readily agree with central banks. Anyone who's familiar with me, I hope I'm not offending anyone who's from the Reserve Bank of Australia here. But I'm not one to really pay a great deal of respect to central banks. I mean, the 3 worst forecasting organisations in the world based on track record are probably the IMF, the World Bank and the Reserve Bank. But I have to say the Fed might have it right on this occasion. Part of the reason why I think the Fed has it right is because I never agreed with quantitative easing 3 anyway, QE3 anyway. QE3 was never needed. QE3 is a coincidence that coincides with the grand bull equity market. It's not the cause for the equity market. People say it's the cause for the equity market because they were bears and they said the market can't go up, market's going to collapse. We've just had one of the greatest bull markets in history and all the way up, CNBC, Bloomberg, driven by the major US investment banks and European investment banks told you sell the rally, right? And they've got it completely wrong. Rubini's completely wrong. I debated Rubini on stage in Rome at the height of the sovereign debt crisis to 600 European CFOs, and they couldn't believe that anyone else had a different view. They were only discussing degree of disaster, and I was pointing out that Greece would always stay in the euro and the euro would be strong. Everyone thought that was complete nonsense, but that's how it played out. But we also are having a grand bull market in equities. It's one of the biggest bull markets in history, but everyone's still skeptical. It's already one of the biggest bull markets in history. And it's already made new record highs. So to cover their tracks for being wrong, all these analysts and economists in Wall Street and London and Zurich, they all came out and said, oh, it's because of quantitative easing. That's what's fueling the equity market rally. And that was to cover their tracks, and that's all it was. So, but then we've got this big focus on quantitative easing is the reason for the rally, so you take that away, the rally ends. No, the reason for the rally is that Main Street all over the world has forgotten about Wall Street and the Hill in Washington and just got on with the job of making widgets and making money. I mean, basically the world's now driven by SMEs in the new first world of Asia and Latin America. And the leaders and the economists of the old first world of Europe and the United States still haven't figured it out. So corporate profits will continue to increase, but I'm probably starting to move on to other questions. I forgot I was only answering one question.
Very insightful. So the second question, Australia will host the 2014 G20 summit. Currently, our government is searching for a big idea to present. Economically, what, in your opinion, should that be?
It's an idea I raised at APEC in Russia last year, and that is we should have a regional currency, like the euro. At the time, everyone said, what? But the euro's a disaster. I said, no, the euro's a success story. The situation in Europe would have been far worse if they didn't have the euro. Okay? And the euro held. In fact, during the sovereign debt crisis, I think they had another 1 or 2 peripheral countries join the euro. So the euro was hardly disintegrating, as all the major banks told you it would. So regional currency is great. It's particularly great to get ease of trade happening. And one of the great drivers of global trade over the last 15 years has been intra-regional trade, which I sort of gave it that name about 10 years ago. And that's where countries within Asia and Latin America discovered that they could make just as much money or more money trading with each other than they could with the United States or Europe. Okay, so discovering that business with each other, intra-regional trade in Asia has been a major driver of global growth. In fact, less than half of China's exports go to US and Europe combined, and they're having 25% growth in their exports to Asia, okay, the rest of Asia. So intra-regional growth, which would be amplified and accelerated by a regional currency. Regional currency is great, you know, it's good to give it academic reasons for why it should happen, but the real reason is so we can sell our rocks to Asia without our currency going up. So basically for Australia it's a great advantage. It's resource boom enjoyment without currency appreciation. So that would be my suggestion.
Very good. Question 3. Australian politicians, and this is a question, not an opinion from myself. Australian politicians are very backwards in their thinking. With the federal election looming, I've decided to vote for no one because I believe there is no one fit enough to govern this country and to address the issues close to me. Do you think the Australian government is listening to economics such as yourself? If not, why not? And I know you don't normally like delving into politics too much.
Oh, I hate delving into politics. No, we're second. Well, I mean, basically, we're currently experienced, regardless of even if you're a Labor voter, if you ask Labor voters what's the worst Labor government since Federation, there's a chance they might say this one. So that means it's one of at least two. It's at least one of the 2 worst governments since Federation. That's how bad it is. Okay, so. That's why everyone's looking forward to when we're going to have a change of government, etc. But hence the frustration by people with political leaders. Do political leaders listen to economists? They tend to listen to economists that they want to listen to. They tend to believe what they want to believe like anyone else. I proposed, I think I can say this, I proposed a new tax policy structure idea to Joe Hockey a couple of years ago. And he said, sounds great, but we're never going to do it because it involves increasing the GST. So there's always that political hurdle to what might make good economic sense. At some point, though, we have to prove to our political leaders and our political parties that we're prepared to vote for things that are difficult. And I think there is an opportunity for people to go out into the marketplace, into the media, and sell ideas before they're sold to politicians. I think we have to turn it around. We have to sell the ideas. Say I have to go out and sell my new tax structure idea first so that people will vote for it before political leaders will accept it. And that's, you know, it's a long journey, it's a long path. China has a huge advantage. They're a one-party democracy. It's a reasonably good democracy within the one-party structure, whereas the United States, Britain, Australia, we're a 2-party democracy primarily. So we're always getting stuck, whereas they have committees that go off and debate things, work things out, come back with solutions, and it's a one-party, so they adopt it. They move quickly. Hence, it's probably the world's best-run capitalist system. But in terms of disillusionment with political leaders, I think that's a fact of life, and I don't think it's a new phenomenon. I think it's particularly intense at the moment because we've had a particularly bad government. I mean, Australia's the country that shot itself in the foot. We haven't done badly. We're not having a domestic near recession because of global events. It's all because of our own doing. We had the world's most aggressive central bank, and we introduced more regulation and more taxes, so of course we're struggling.
How would just briefly, how would your new tax structure work, Clifford?
Oh, it's very complicated. Company tax goes from 30 to 20. Reason for that is to inspire fresh capital investment so that our manufacturers can, sort of adopt technology so that they can actually sell products for all of Asia. We've got to stop thinking about selling products for Australia, just sell products for all of Asia. To do so, you need a lot of investment, and a 20% company tax would attract that sort of investment. Top marginal income tax, 20%, and GST, 20%, so it's sort of the 20% rule. It could have been more complicated, but I thought that might be easier to sell. And you can sell it to voters because they get something like a 40% after-tax increase in their take-home monthly pay. So you think of the multiplier of effect through the economy. First year you have a huge deficit, but after that you'd have GDP growth of about 6.5%, which is what should be normal for Australia, given that we should be receiving a 3% GDP boost from the resources sector, and our domestic economy should be growing at about 3.5% as well. So you get up, we should really be running 4.5% to 6.5% GDP in the midst of the world's greatest ever resources boom, but we're not. So yeah, it's 2020, but also, sorry, this is why I've got to go carefully. I don't want to get assassinated by a tax agent. There's no deductions. So it's just all simplified. People can get back to getting on with their lives and being productive. The other thing is no mining tax, but mining companies pay all their own infrastructure. Taxpayer doesn't pay for it anymore. And I've got some very senior mining people ready to tick that off. No carbon tax, but we actually have a policy that's good for the environment, to clamp down on pollution, which the current carbon tax doesn't do. But that's about it.